Alright, let's get into the game. Let's get to the business. Hello, 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 hello. Hopefully everybody can hear me, and hopefully I don't know if anybody can see me, but it's okay. Let's get into the alright, today's today's lessons. Okay, so today's lesson we're going to be talking about right here on TradingView. I'm using the TradingView platform, okay, right here on YouTube. Okay, so we're going to be looking at last time in my last lesson, okay, I talked about highs and lows, how to identify highs and lows as far as beginner analysts, okay, before we're going to graduate to become a trader, okay, that we want to be in the future. Okay, we need to we need to first of all learn to become a good analyst, because a good analyst is what becomes a good trader in the future. Because the truth is, if you don't know how to analyze the market, okay, if you don't know how to analyze the market, it is going to be very impossible for you to become a good trader. It's not possible for you to become a good trader when you don't know how to analyze the market, when you don't know the direction of the market, when you don't know where the market is going to go to. When it comes to looking at the monthly bands, long term, that is a long term view. When it comes to market structure, you don't know where the market is going. Maybe it's up, maybe it's down. When it comes to the short term trend, you don't know. And the short term view, you don't know. Once you don't know all of these stuffs, you don't know how to put the trend lines. You don't know what confirms the highs and lows. You don't know what confirms an uptrend and a downtrend. All of these stuffs you must learn. You need to know all these stuff to enable you to become a good analyst. Then you graduate to become a good trader. Now on the other hand, right here, we also need to learn, okay, this thing shifts, I don't know what happened. Okay, I guess we just have to let it go like this. Anyway, let's let it go like that. So chaos, not a chaos pattern. Okay, now let's get into it. So after all of those stuff that I just said previously, we also need to learn about the chart patterns, the market behavior. Okay, we need to learn the market behavior. All right, now we need to, when I talk about market behavior, we need to know what patterns that the market is creating, which is called chart patterns or market patterns, that we can trade, the ones we can trade and the ones we should stay out of. Now, for example, on my left hand on the screenshot from me here, okay, hopefully when you are viewing it, it can be your left hand side, okay, or right, I don't know. Right here for me, I drafted, okay, I drew 3 different chart or market patterns that we can trade easily, okay, after learning how to trade it easily. All right, first we have the downtrend, we have the uptrend, and we have the consolidation, okay, which is, some people can refer to as a sideways movement in the market. And we can easily trade all of these stuffs. Once we see them on the higher time frame, we can capitalize on them also, confirming it on the smaller time frame before we trade. For example, if we see a sideways movement consolidation, for example, on the daily time frame, we can easily trade it on the 4-hour, 2-hour, 1 hour, all the way down to the 15-minute chart. If we see a confirmed uptrend on the daily, on the weekly, on the monthly, we can trade it on the smaller time frames. Okay, and if we see a confirmed downtrend, it is the same thing. For example, these are patterns that we can trade as far as beginner analysts, that is, measuring to become a trader in the nearest future. Believe me, these are patterns we can trade in the nearest future once we learn how to trade them. Now, in a scenario like this, so let's say back in time, we do not have this leg, okay, right here. This one circled with the black circle right here. Let's say we don't have it in the chart, and if we wanted to sell the downtrend after we realized that the market just confirmed lower lows, lower highs, lower lows, lower high, okay, how do we trade this to the downside? Because this is a sure confirmed 100% downtrend, because I already taught in my last lesson, okay, my last stream, my last video. If you watch it, you're going to see I talked about we need a minimum of 2 highs and 2 lows to confirm a downtrend, and also a minimum of 2 highs and 2 lows to confirm an uptrend. So this is the first high, second high, first low, and second low. So once the market went up for the third high, okay, so if the market is going to continue to push to the downside, all we just need to do is to take a counter trend line. For example, we're going to take a counter trend line like this, and this counter trend line, we're going to be learning how to use the counter trend line to, to trade the market, to find a trading opportunity. I'm going to be sharing that with you guys, my viewers all around the world, hopefully. So we're going to take a counter trend line like this, okay, and we're going to use it to be trailing the market. Once the market started buying at this level, okay, we're going to start trailing the market in this way with the counter trend line. So once this market, okay, right here, breaks this counter trend line like this, okay, it broke this counter trend line. This area is where we are going to have our what do I call that, okay, at this area is where we are going to have our counter trend line break, okay, right here. And once the body candle closes below right here, okay, once the body candle closes below this counter trend line, I mean this green line right here, this is where you and I want to start selling, shorting the market, especially, okay, once we realize that, for example, let's say, for example, we spotted this movement, okay, let's say we spotted, for example, okay, let me say we spot this movement on the 4-hour time frame, on the 1-hour time frame, on the 15-minute chart, on the 30-minute chart. And so if we are trading on the 1 hour, let me use the 1 hour for example, okay, and we spot this kind of scenario, all we need to do is go to the daily time frame. We are going to learn about trading time frame and the confirmation time frame. I'm going to be talking about that up in my upcoming videos, all right? Because right here on YouTube, I'm here to share to viewers all around the world, especially basic course, the foundation of this business, to beginner analysts, okay, beginner analysts all around the world. So what I'm sharing right here is that at the basic stuff, at the beginner stuff that all traders all around the world should know. And I believe all those who are professional today, they knew all of these stuff. So back in time, someone like me, I don't know about this stuff, but for you who are still struggling, okay, how to understand this is going to be helpful for you. So I will implore you that you want to try to make our time to watch this video and pay attention to my words, what I'm saying, and try to watch this lesson over and over and over and again, okay? So once this trend line was broken right here, this is where we are going to take the trade for sell, and we are going to go, for example, if we are trading on the 1 hour, we're going to go to the daily, because the daily is going to be our confirmation time frame. Yes, because in this business there is a trading time frame and there is a confirmation time frame. So once we go to the daily time frame, and we saw that previously, for example, okay, let's say on the daily time frame we have the market going like this, okay, and we saw that the market, okay, is like this on the daily time frame. I'm going to take that again because I'm going to show you an example anyway on the chart, okay? So let's just move on. I'm going to show you an example. So we're going to go to the daily time frame to confirm if the daily is also confirming this overall downtrend that we are trading on the 1 hour, 2 hour, or 4 hour chart. Yes, if the daily is not confirming it, we can check the weekly. If the weekly is not confirming it, we can check the monthly. one of those two higher time frames should be confirming this downtrend for us. Okay, one of those three higher time frame rather should be confirming that the downtrend that we are trading on the 1 hour, 2 hour, 4 hour chart is confirmed. Okay, and another important thing we want to put in our mind or want to take to heart is that we want to trade in the direction of the monthly support resistance band. So in this case, I'm talking about the downtrend. So we must make sure that that currency pair that we want to trade at that time, that we are seeing all of these stuffs happening right there. Okay, we want to make sure that we are in alignment with the monthly resistance band area. What do I mean? I mean the long-term view. So the monthly bands area are going to be confirming for us the long-term view of the market. So if we are shorting whatever pattern on the smaller time frame as a swing traders, okay, 1 hour, 2 hours, and 4 hour time frame as our trading time frame, for example, we must make sure that long-term view is in our direction. I mean the monthly resistance band. In this case, we are trading downtrend. Yes, okay, it will mean that we are aligned with the long-term view. So even if we want to set the market short term, we must also make sure that the monthly long-term view is in our favor. And this is us talking about probability. Okay, we are looking for a probability trade that we want to trade, and we want to have more wins, like 7 times out of 10. Okay, if we do like that 7 times out of 10, we are going to have more wins than more losers. So in my own opinion, all right, because of the way I have been taught this business and I have seen this happen, although I'm a new guy in this business, just about, let's say, roughly 2 years and some few days, okay, in this business, studying this business, this is what I have seen time and time and time over the months, years, you know, days, week, nights. I have seen this happen. All right, and that's the reason why I decided to come right here on YouTube to share my opinion to many of you guys who are looking for the right course to learn, okay, to teach you this business in the correct way. I mean in the correct way, and that is what I'm here to do for you guys. So you guys don't want to take these lessons for granted. I mean, you don't want to take for granted. I paid money to my mentor to learn about this business, but I'm here to share with you guys for free. Okay, it's not a problem for me to share what I learned. Even if I bought it, it's not a problem for me to share it for free. I don't have issues with that. Okay, because I know that once I begin to trade real life, I'm going to make money. So there's no point in me asking people to come and for me to teach them this business, and at the end of the day collecting money from them. It doesn't, for me, in my own humble opinion, for me in person, I'm talking about myself only, it doesn't make sense to me. So I'm sharing with you what I have paid money to learn, okay, and I've seen it work. Okay, I've seen it work. But you know, over the years, putting these informations together is not easy. But believe me, guys, with time, you're going to get it right. I have made tons of mistakes. Believe me, I have opened demo account to trade all of these stuff. I keep forgetting one thing or another, and I have blown several demo accounts. I even went to trade a real life, you know, buying a Profriend account, trying to implement all of this stuff. I lost. Okay, so this year, 2024, I said to myself that I'm going to teach people that needs to know this stuff. I want to teach them for free right here on YouTube, and I will also use it to help myself. So right now, I've started that journey, and I want you guys to journey with me, okay, so that we can make it together in this 2024, because we cannot continue to make silly mistakes and we keep, you know, drawing ourselves back all the time. So I'm here to change my own life with this stuff, and I want you guys to follow up so you guys can change your own life and change your trading style Okay, because this little, yes, it might look little, but believe me, these little informations are what you need and what I need to help us to move on and move higher in this business. So guys, let us continue with this. So this is what you want to do, and before you know it, in your very face, okay, in your very face, believe me, you're going to see the market. Okay, you're going to see the market. Once the market pull all the way to the downside, okay, how did I do this stuff? Okay, right here. All right, so once this happened, before you know it, you're going to see the market pushed all the way up. Okay, all the way up, and it's going to fall all the way to the downside. And you're just going to make profit out of it. And it is the same thing when it comes to the uptrend also. At this level, you put your counter trend lines in this manner, and what do? Okay, you're going to see the market close body candle right here, just like this. Okay, it's going to close body candle right here, and what do you want to do? You want to enter the market. Where do you put your stop loss? I forgot to talk about putting your stop loss. So your stop loss is going to go at the pattern traded. All right, yes, that is where your stop loss needs to go, to this area. Why should you put your stop loss here? Why should you not put your stop loss here? If you put your stop loss here, okay, don't be shocked, okay, don't be surprised that the market can still push all the way, like this, and push all the way up and hit your stop loss right here. And the moment that happens, guess what? The market will start reversing to the downside, and you don't want that to happen to you. All right, you don't want that to happen to you. So the safest place to put your stop loss is right here. Okay, right here, because your stop loss need to go at the pattern, at the previous pattern traded already. So since the market already confirmed the downtrend, makes a new lower high, okay, and break your counter trend line, you want to take this trade after confirming it on the higher time frame, maybe the daily, the weekly, confirming this downtrend that you are trading on the smaller time frame, and you are taking that trade. Believe me, this is where you want to put your stop loss. Not joke. You know why? The reasoning is because the stop loss is what make the money in this business. Talking about technical analysis, the stop loss is what make the money. All right, so if you put your stop loss, I have done this several times, and believe me, you're going to be surprised that the pattern you are trading is still very there. You are trading the short-term downtrend pattern, okay, and once the market takes you out right at this level and it started falling to the downside, you're going to see that the pattern is still there. This high has not been taken out. All right, the market is just going to go all the way up, hit you out, and this high is still here, for example, and the market is just going to take you out and it's just going to go down all the way. I have seen this happen countless times. So let's not make that mistake of putting our stop loss right at this level, although there is no right or wrong. Okay, if you want to trade a bearish candlestick pattern, okay, you can decide to put your stop loss below the bearish candlestick pattern also, but for me, the safest place, okay, the safest place is, the way I learn, is to put your stop loss right here. All right, okay. Now you can say to me, what if the market should come here to hit the stop loss? Of course, it can happen. There is no right or wrong. The market can still come all the way up here, take out the stop loss here, and start falling to the downside. It's normal. I have also seen it happen. But then, if the market should take you out on this place, it's okay. Okay, if you put a stop loss here and the market takes you out, for me it is fine, because for one strange reason that is called random distribution in the forex market. I don't know, maybe it happens in other financial markets. Okay, for me in the forex market, what is called random distribution can make price to come all the way to hit your stop loss out, and after that you're just going to see the market start falling down. But once that happens, you want to make sure that you retake that trade. You want to enter that trade again once the market confirms the short-term downtrend again. You have to wait for another confirmed short-term downtrend. Once it happens again, you want to sell that market. And the same thing goes to when you are also buying the market to the upside. Okay, you also want to do the same thing, and you're going to see price start doing what? And start pushing all the way to the upside. Alright guys, so let us take this information. It is very vital right now. We want to take this information to add. Now when it comes to consolidation, how do we trade consolidation? It's simple. All we need to do is wait for the market to complete 100%. This is going to be 25%, this is going to be 25%, this is going to be 25%, this is going to be another 25%. So once, just like as you are waiting for the market to confirm, you know, the short-term downtrend, the short-term uptrend, you know, a minimum of 2 highs and 2 lows, we want to have it on the short-term and downtrend and uptrend. It's the same thing with the consolidation. You must wait for the market to confirm this sideways movement, because once the consolidation is coming, you are not seeing it, but you want to follow up, because once the consolidation has been established, believe me, it's going to move to the next step. If that consolidation is going to continue, the next thing you're going to see, for example, this was the last area the market came to. You just want to put a counter trend line in this kind of scenario, and you want to do what? You want to buy the you want to short the market like this. Okay, so once the trend line is broken, okay, for example right here, once the trend line is broken, the market closed below this area. Okay, I'm not getting it right. So once the market closed below this area, you want to start selling this market all the way to the downside, and stop loss is going to go right here. And it's for me it's that simple. Back in time it was not that simple, but for me right now it is that simple. And this is how you also buy the market. And if the consolidation is going to continue, all you just need to do is keep putting a counter trend line to trail the market. And for me, it's that simple. Okay, for me it's that simple. So whenever the market breaks the counter trend line, okay, close body candle above it, you want to do what? You want to buy the market. If it's selling, you want to sell the market. Once that trend line is broken, stop loss go below or above the consolidation. Okay, and for me, that is the way I have been taught, and that is the way I've seen the market work out. And if you follow through, believe me, you are going to 7 times out of 10 you're going to win your trades. And let's not forget, let's take this to out also right here. Okay, it says when we trade an uptrend or a downtrend and we lose 1, 2, or 3 times in a row on the same time frame, okay, on the same time frame, there is an 80% chance that there is a consolidation on the higher time frame. Okay, so we want to always wait for the market to confirm that 100% consolidation movement, just like as we are going to wait for the market to confirm 100% downtrend or 100% uptrend before we buy or sell the market. It's the same thing we are going to do on the consolidation time frame. All right, now right here, okay, right here you can see, and this is going to be a tradable market patterns, and right here this is a non-tradable market patterns or chart patterns, whichever way you want to call it. Okay, this is a pattern. Some people, some traders all around the world, they have become so effective when it comes to trading pattern pattern. Okay, but for forex beginner analysts like myself, I always stay out on this market. Yes, because even up to now I'm still not skillful in trading it, and we have 28 currency pairs. So if I see this kind of movement, I just stay out and look for other currency pair to trade. All right, what about this one? This one is called chaos, and as I've learned, even professional traders around the world lose money on what? On this kind of pattern. So for me, it means stay out. All right, guys, it's absolutely a stay out market. It's called chaos. All right, because you're never going to know where to put your stop loss, and you're never going to know what the market is doing. So for me, this is complete stay out. All right, guys. Okay, so this is what I have to share with you right here. So if you want, you can take a picture, or you can watch the stream later. Okay, watch the stream later and pause the video and take a picture of these stuffs right here. All right, guys. Okay, okay, you guys, I'm trying to make it balanced. Okay, I think I have messed with it. All right, let me do it this way. Okay, right here. No. All right, like this. Okay, so you want to take a picture and then all of those stuffs. All right, guys, so now let us go into the charts properly and see some of these patterns. For example, Euro NZD right here. Let's look at Euro NZD on the daily chart. Okay, let's see. Did I draw the monthly resistance support band? Yeah, I didn't draw it right here. Okay, so let me just make a use of a line right here. So this is the resistance level. All right, and this is going to serve as a support area right here. Okay, so I'm going to change this color to red. So that's the resistance. So long term, the market should go all the way to the downside. Oh, this is Euro USD, sorry. Yes, I have these support and resistance band areas on this one. So this is the Euro NZD. So back in time. Okay, so I need to take all of this stuff out. I was giving a class to other platforms, that's why I have the drawing. So let me take it out. Okay, that one can stay. Previous monthly high right here. And this is what I talk about as chaos. All right, guys, as you guys can see on the daily time frame, chaos is a chaos pattern, and we can see it right here on the daily, on the 4-hour chart. When the market was making higher highs, higher lows, higher highs, started making lower lows, lower high, lower lows, lower high, lower lows, started making higher highs. You wouldn't know exactly where you are going to put your stop loss, and at the end of the day, you can see what happened here. The market came down to this level, and now it's beginning to push all the way to the upside again. So let's say, for example, you are on this trade right here. Okay, you take the trade, bullish candlestick pattern right here. All right, and you are still holding on to the trade, and finally the market decides to come all the way to the downside and take you out. Hopefully your stop loss is here, and now it's going back to the upside. So it doesn't make any sense for me. So in my own opinion, it's going to be a stay out. This is what I call chaos pattern right here on Euro NZD. Okay, now let's look at for a trend market we could trade. We would have traded back in time and make some profit on it on the 4-hour time frame, and right here we can see the market was trending to the upside. Okay, so like I said, it makes a lot of sense to sell the market than to buy the market, in my own opinion, because Euro USD long-term view, okay, the long-term view is down. Why? Because of the monthly support and resistance band area. We can see here. Okay, this is the resistance band, this is the monthly band. So long-term view, the market should come all the way to this area. So it will make a lot of sense, okay, as far as beginner analysts, to always look for a short-term position. I'm not saying we cannot sell. I'm not saying we cannot buy the market. We can also buy the market. But when it comes to higher probability, selling the market will make more sense to me than buying the market. We are going to risk less. Yes, we are going to have more, as in, we are going to have 7 times out of 10, we're going to be winning most of the time, and we're just going to lose a few times. All right, so back in time right here, okay, back in time right here. Now let's do something. Okay, let's do something. We have a confirmed downtrend back in time right here. We have a lower lows. So we have a lower lows right here, we have a lower high right here, we have a lower lows right here, and we have a lower high right here. The market did break to the downside right here, right? Okay, as we can see right here. And back in time, there was also the trend line confirming this trend all the way to the downside. All right, as we can see right now. Okay, now let's go to back in time. Okay, let's look at the daily. What is the daily saying? So we're going to look at we're going to take a vertical line, and we're going to use a vertical line to look at the date. So it was 18th of July 2023, okay, around 5 p.m. or 5 a.m. I don't know. All right, so this was what happened. Okay, now let me change the color to yellow. All right, now let's go to the daily, which is going to serve as what? The confirmation time frame back in time. And let's see, did the market confirm the downtrend on the daily? Well, previously the market was trending to the upside. So okay, we have higher highs, higher low, higher highs here, higher low. Okay, and we have this higher high here. All right, guys, so this was the previous uptrend back in time. So for us to confirm that this movement, okay, right here has confirmed the downtrend that we want to trade on the 4-hour time frame, we must see the market break this low right here. The market needs to take out this low. So let's confirm which is the lowest. So the market needs to confirm, take out this low here. If I'm not, okay, it's not that one, I think this one. So the market needs to take out this low here. All right, guys. Yes, this low needs to be taken out because this is a low. All right, when I talked about what is a high, this is a center candle that have 2 candles by the left and 2 candles by the right. So this candle here is a low. So back in time, we would have waited, because we are not just going to enter the market because we saw a downtrend on the 4-hour time frame. No, it's never going to work like that. This business does not work like that, because the market can still, we can see with our clear eyes that on the daily the market is trending to the upside. So why are we going to be selling the market on the daily? The daily time frame controls the 4 hours, 2 hours, 1 hour, and the rest of the smaller time frames. Let's not forget, higher time frame controls price action and price movement on the smaller time frame. So why are we going to be wasting our time shorting the market on the smaller time frame, and the higher time frame is moving to the upside? So the only way we would have short the 4-hour time frame, that is the short-term downtrend on the 4-hour time frame, is that we have to wait for this low right here, okay, to be taken out on the daily. And when that one happened, we can see that right here, this market made a new low right here. This makes a new low, this candle here. All we need to do, once this market make a new low, then only then we are going to go to this 4-hour time frame, okay, and that happened right here. Okay, we are going back. Okay, that happened right here. So selling this downtrend back in time, this short-term downtrend, okay, right here, would have been a risk. Yes, it would have been a big risk. We taking a big risk, in this market back in time? Because the market is trending to the upside. Or maybe we could also check the weekly to confirm if the trend is down at that time. Okay, as you can see here, the market only made a bearish candlestick pattern. The short-term trend was still up. So if we say we are selling bearish candlestick pattern, for example on the 4-hour time frame, it is completely different from us selling a short-term downtrend market or chart pattern. All right, it's completely different. Bearish candlestick is a pattern. Short-term downtrend, short-term uptrends, they are also patterns. So we cannot say, oh, we are shorting a short-term downtrend on the 4-hour time frame when the market short-term trend is up. It's trending to the upside. But if we say we are shorting the bearish candlestick pattern on the weekly right here on the 4-hour time frame, it's absolutely a different story right here. If you ask me, okay, if you ask me, that is absolutely a different story. Now, if we want to short a bearish candlestick pattern, in my own opinion, there was no bearish candlestick pattern here, and this was where we got the bearish candlestick pattern here. This right here. All right, this was where we got the bearish candlestick. So we're going to take out the short-term downtrend back in time. Although we didn't learn about, I'm not teaching, okay, bearish candlestick pattern here right now, okay. But what are we teaching? What is the purpose of this lesson today? Is tradable market patterns. All right, I'm not talking about bearish candlestick pattern. Bearish candlestick pattern right now is also a pattern we can trade. Okay, for example, I'm talking about downtrend. Okay, a short-term trend, which is a downtrend. So this short-term downtrend, we won't be able to trade this short-term downtrend that we are seeing right here. Okay, the only time we'll be able to trade the short-term downtrend, okay, it is only when on the 4-hour time frame. Okay, on the 4-hour time frame, because this is the 4-hour time frame short-term uptrend. All right, so there's something we also need to take to heart right here. Back in time, so this was I think this is a low. Let's confirm the low. Okay, right here, this candle and this candle, which one is the lowest? How? This one is the lowest. Okay, this one is 1.08333. This one is 1.0833 and 5. So this is higher and this is lower. So back in time, the short-term trend on the 4-hour time frame was up. Okay, now even if the short-term trend was up, it was making higher highs, higher lows, higher highs, higher lows. And let's look at the next higher high, the next higher high, the next higher high. Let's see. Okay, in my own opinion, this is the high. This one, yes, higher highs and higher low and higher high right here. Okay, once this low, okay, on the 4-hour time frame was taken out, this low here, once this low was taken out, it was all fine. Yes, once this low was taken out, it was fine that this market is no longer in an uptrend. We have a confirmed downtrend on the 4-hour time frame. It's all good. It's all good. But do we have a short-term downtrend on the higher time frame to back up this short-term downtrend that we are seeing? Are we going to base our reason of shorting this market because we saw that this short-term uptrend, the higher low has been violated, so therefore we are no longer in an uptrend, we are now in a confirmed downtrend, so we are going to begin to sell the market. Is that the only reason why we should short this market? In my own opinion, this shouldn't be the only reason. Okay, if for example the 4-hour time frame is our trading time frame, okay, this only is not supposed to be the only reason why we should be shorting the market. Talking about those of us that have been in this business for a very long time, it is fine for them to short the market. Okay, it is fine for them to short this market at this area. Why? Because of the knowledge they've acquired over time, and if you ask them, they might tell you that it is not the short-term downtrend that they are trading. They are trading a bearish candlestick pattern, which they saw on the weekly time frame, which is all fine and good. And if they saw a bearish candlestick pattern on the weekly time frame, where and when would they enter the market for, or shorten the market on the 4-hour time frame? It's simple. They are only going to short the market on the 4-hour time frame, okay, once this market closed for the week. And the next week, they are going to start shorting the market on the, excuse me, what is here? Okay, didn't get it. All right, so they are only going to short the market at this level once the market open for a new week, because that was the weekly candle. Okay, they're only going to short the market at this level right here. So this is where they are going to short the market. So their counter trend line is going to be here, depending. So when this market close body candle right here, this candle here, so this is going to be their entry right here. Their entry is going to be here, and their stop loss is going to, depending on each traders. All right, in my own opinion, their stop loss is going to go right here, and 7 times out of 10 they are going to win the trade. And what happened at the end of the day? The market fell all the way to the downside. Okay, this is Euro USD back in time, and also the monthly long-term view, which is the monthly resistant band, is also telling us that the long-term view is down, and we can see how price pushed all the way easily, with ease, all the way, and they were able, maybe some of them were able to take profit at this level, and maybe some of them are still holding the trades up to now. I don't know, and maybe they hold the trade to this area before they decide to take their profit target. And believe you guys, my friends all around the world that are going to be viewing this stream right now or later, believe me, you and me can predict a movement of the market like this long term as swing traders, all because we have the right knowledge, all because we have acquired the right education, the education we need to go by in this business and have more winning instead of having more losers in this business. I am completely fed up and tired of taking losers, even on the demo account. It drives me crazy, because I know once I begin to make it on the demo account, that is my breakthrough, because I'm going to be applying what I'm using to make profit on the demo account. I'm going to be doing the same thing with the real life account. All right, guys. So talking about the downtrend, talking about trading a downtrend back in time, this is how you go about it. So if you don't have a confirmation time frame on the higher time frame, you don't trade a downtrend. And if you have a confirmation, believe me, this is the place you're supposed to be selling this market, because this already was the low that broke. Okay, that tell us on the daily that the market just confirmed that it's no longer in an uptrend on the daily time frame. All right, if we look at it right now, you're going to see right here, remember what I said earlier, the market broke this previous higher low right here, it pulled back, and what happened? The market still fell all the way to the downside for days. So if you have patience, okay, and you decide right here to sell this market at this level back in time, you would have won this market back in time right here. So once the market close body candle right here, you're going to take your position right here, and you're going to risk 1-for-2 risk reward ratio, in my own opinion, and short the market right here. Stop loss goes above the pattern traded, which is this one, okay, because this was a lower lows, lower high, lower lows, lower high. We can see the market confirmed, all right, right here, lower lows, lower high right here, and look at audio fall. And believe you, my friend, okay, you that you are viewing this stream right now with me, okay, you would have risked 1-for-2 risk reward ratio, okay, in my own opinion, in my own humble opinion, and this would have been a winning trade for you, hopefully. Right here, you can see right immediately the market hit the profit target right here. Maybe not, but then you would have managed your profit anyway. If you risk 1-for-2, you would have also managed your profit, because I believe the market hit that and started pushing to the upside right here, right here. And that was so easy, that in my own opinion, okay, sorry, I put this stop loss in the wrong place. Stop loss should go here, because it's going to be 1-for-2, lower lows, lower high, lower lows, lower high. Stop loss should go on the pattern traded, so stop loss is going to come here. So if your stop loss was here, and this is going to be your 1-for-2 risk reward ratio, for example, right here, okay, right here, just like this, and you would have won this trade with ease, my friends, just because of proper education of this business. And you would have won along the way in this trade. If you didn't trade the market all the way from here, because maybe you haven't learned about bearish candlestick patterns, how to trade it, then this is where you should have traded this market on the 4-hour time frame, and you're still going to win. But if you learn about trading bearish candlestick pattern, you would have started selling this market all the way, and you would have making profit, and you're still going to make profit all the way to this level back in time. And talking about an uptrend, although this is a retracement on the 4-hour time frame, all of this stuff you guys are seeing is a retracement on the 4-hour time frame. So you would have also buy the market knowing how to trade, okay, retracement, and you would have also buy the market once the market confirms there are higher highs right here, okay. The reason why it's so dangerous sometimes to trade a retracement, you know, is because higher highs back in time, higher lows, higher highs, and you would have been waiting for the okay, not this one. So higher highs, excuse me, higher highs, this is a retracement, but it's going to be against the monthly band. So it's not going to make sense to trade against the monthly band long-term view. In my own opinion, it doesn't make sense, because the market can take us out at any time. Even when we are trading in line with the long-term view, which is the monthly band area, okay, the direction, the market can still take us out. How much more when we are not trading in the long-term view direction? That means the monthly band area. You know, it's more riskier. So in a scenario like this, I would prefer to trade, you know, uptrend. If I want to trade an uptrend market, for example, I'll be looking to buy GBP USD. Okay, GBP USD is in an uptrend. The monthly bands, okay, the monthly bands right here, the market should push all the way to the upside, because the monthly band resistance is here. The monthly band support right now, as you can see, is right here, and the market already hit monthly support level. So I will be looking for long-term buys on the 4-hour time frame, on the 1-hour time frame, whatever time frame. Why? Because the market is moving away from monthly support band area. All right, so I will be interested in buying the market always. I will always be interested in buying the market not selling. Why? Because I know for a fact that the monthly bar and long-term view, market should push all the way to the upside. So I'm going to be using that one as a guarantee, number one, for myself. Not like a full guarantee, because sometimes even when I do everything right, the market can still go against me. But then I always, when it comes to probability markets that are going to give me more wins 7 times out of 10, I prefer to be in the direction of the monthly support or resistance band area, the same direction. All right, so in this case I'll be looking to buy the market always. All right, at this point in time, talking about buying the market, so if I'm to buy this market back in time, okay, so this is going to be higher highs, higher lows right here, and higher high. Then I'll be waiting for the market, to retrace and do what? Break my counter trend line. So this is the highest point. So my counter trend line must go to the highest point. Then I'm going to do like this and do like this and do like this and do like this. Okay. So the market needs to break my counter trend line before I enter the market. So when this market was coming down, going up, I can clearly see that it did not cross body candle above my counter trend line. So I'm not going to enter this trade until only when at this time, okay, let's see back in time. For example, I am only going to enter this market. Let's look at this. Yes, I'm only going to enter this market once this counter trend line broke this. The market broke this counter trend line right here. All right, as you can see, this candle right here. I'm going to enter this market right here, okay, and I'm going to adjust the lower lows, higher highs, higher lows. So it's not going to be this anymore. It's going to go like this, higher high, or better still, so we have a new uptrend from here. So it's going to go like this, higher highs. Come on, what's wrong with you? Higher highs, higher lows, higher highs, higher lows right here. And besides, my counter trend line is going to go this way, and I'm going to start buying the market at this level, not even here, at this area. Once this counter trend line was broken, I'm going to enter the market at that level. Okay, and why will I enter the market at this level? It's simple. Okay, because previously the market's short-term trend was down. As we can see here, the market violated, this was a higher low, this was a lower high, and lower lows and higher high. Then the market started playing in between this area, messing around at this level. So once this market started making higher highs, higher lows, higher highs, higher lows, counter trend line break, I'm going to enter the market at this level. And what happened at the end of the day? We can see how the market pushed all the way to the upside. And for me, my friends, it is that easy once we have learned this skill in the correct way. But without this knowledge, without this right educational knowledge of this business, we are absolutely going to make tons of mistakes in this business. And believe me, my friends, that is the reason why I am here to help out, so that we know what we are doing in this business. Okay, so we cannot just be entering the market blindly, trading the market blindly, just like I used to do back in time. But henceforth, it's never going to be the same. And believe me, guys, I have a lot of things I still want to share with you guys. Okay, we did not talk about how to trade consolidation. Okay, let's try to round up and let's look for a consolidation market back in time, and let's see how we would have traded that consolidation market, and where we are going to put a stop loss, and how we would have capitalize on it and make profits on it. And the same thing goes, okay, if we are looking at a consolidation market, we want to trade that consolidation, the long-term view, okay, just as we are going to do the same thing on the short-term trend and all those stuffs. So once Euro USD long-term is sell, okay, and the market starts selling, as we can see right here, it started moving in a sideways. Okay, we saw this sideways movement right here back in time. I'm going to do like this sideways movement back in time right here. Let's make it transparent, and close, and right here. So back in time we saw this movement here, support, resistance, support, resistance. So this was what? This was a 100% sideways movement, confirmed right now. And since we know that long-term view based on the monthly time frame, resistance band, the market is supposed to go to the support monthly time frame band area. So in my own opinion, the way I've been taught, I'm going to be looking to short the market all the time once I spot a consolidation on the Euro USD. I'm not going to buy. I'm only going to be looking for a sell opportunity. Why? Because I want my trade to be in alignment with the long-term monthly view. Okay, and I know for a fact that the market long-term view is going to do what? It's going to sell long-term. So I'm going to be looking to sell the market all the time. So I'm going to take my counter trend line or trend lines, and 1, 2, 3 trend lines. I'm going to do the same right here. And this is how, my friends, how I would have shorted this market back in time. Once this candle closes right here, okay, I'm going to enter the market right here, okay, and I'm going to put my stop loss not just below this area. Like for example, I'm going to put the stop loss right here like this. No, I'm going to put my stop loss right here, okay, at that first breakout. Okay, but this is the first breakout back in time. Okay, so I'm going to put my stop loss right here, and I'm going to be risking from bands to band. All right, and we can see how the market fell all the way to the downside. Okay, and if we are trading a consolidation, okay, once we spot a consolidation on any time frame, we want to go all the way to 1 or 2 smaller time frame closer to the time frame we saw the consolidation. For example, I'm going to be selling this consolidation on the 1 hour time frame. In my own opinion, back in time, okay, I'm going to be selling this consolidation on the 1 hour time frame right here. Euro USD, let's look for it. If TradingView is going to give it to us. Oops, they didn't give it to us. Oh my god, I'm sorry guys. That consolidation we didn't see. Yeah, it's a long stuff, so we didn't get that consolidation here. Let's look at for 2 hours. 2 hour time frame, maybe we are going to get it. All right, it's here. Okay, on 2 hours time frame. Okay, right here, and this was going to be a winning trade back in time, all the way to this level, and we can see how the market did drop, and finally the market went up again. All right, the market went up all the way to this level, and this would have also been another another sell back in time. Okay, the market broke out, and if you don't want to sell the market here back in time, because for me, I will always be looking for the sell opportunity, and I will also be checking my confirmation time frame, which is the daily time frame. So I can either sell the market from this area, okay, and stop loss is also going to go right here, and I'm going to be risking 1-for-2 risk reward ratio. And let us see how the market played out. Did the market fall down? Yes, the market did fall down back in time. We can see all of that from here to this level. That would have been a take profit target. Okay, and if we put our stop loss right here, then hopefully we are still going to be holding the trades all the way until the market finally came all the way to this level, and that's going to be somewhere around here. It's going to be a take profit target long term. And that is how you trade consolidation in the forex market, my friends. Okay, all right guys, so this is what I'm going to be sharing with you for today. Okay guys, tradable patterns and non-tradable patterns. All right guys, so hopefully this helps you as you are about to begin your 2024 journey on this with this business, okay, you want to learn these skills in the correct way and apply what I'm sharing with you. And once you apply it, believe me, 7 times out of 10, technically speaking, in this business, you're going to make more winning trades than more losing trades. Thank you very much for joining and for watching this stream. Please subscribe to my channel for more yet to come. Yes, more is yet to come. You guys cannot imagine what I'm here to share with you this 2024, and I'm going to show to you before I end the stream right here. As you guys can see right here, these are all the topics I'm going to be sharing with you guys. If you subscribe to my channel, and once I'm coming live, you're going to get a notification. And believe me, a lot of things I'm yet to unfold to you guys. Okay, a lot of things. Okay, and this is the foundation of this business, believe me. And after taking all of these lessons, okay, we're going to have a break of what? It's not just a break, okay, we're going to have a break of practicing, implementing what we have studied so far. Okay, we're going to be implementing it on the trading week, and we're going to do that for good 2 weeks. Okay guys, we're going to do that for good 2 weeks. We're going to be trading together, implementing all of this stuff that we are going to be studying together. Okay, all right, so this is what I have to share for you, and I have a lot more to share with you guys. You cannot imagine, a lot more. Yeah, a lot more. And believe me, this is just the foundation of this business, technical analysis. If you don't have the knowledge of what I'm going to be sharing with you, okay, believe me, you are only going to make pips. You're going to make pips. You're going to make pips. A time is coming, and you're just going to give it back to the market, and you're never going to know why, how, what happened. And I'm here to assist you. Okay, I'm here to assist you. So if you like what you have just seen me sharing right here, please subscribe to my channel so you can get a notification when I'm live, coming to share beautiful and well-educated content about this business with you guys and also to the public. All right, I will also be uploading some videos about what I think about some currency pairs, the direction, you know, and you guys should study it and see how you can make pips out of it. All right, thank you very much for subscribing. Thank you very much for watching this stream, and also give it a thumbs up if you like it. I really appreciate that. Also, I remain Javan FX right here on TradingView, and from me to you, it is bye bye for now.